connect with the management then of Kalyan Jewellers. Ramesh Kalyanaraman, who is the Executive Director at Kalyan Jewellers, now joins in on the show. Thank you so much for taking time out. Let's understand your demand trends, how they've been shaping up. Has there been any impact, largely on the back of the sharp rise that we've seen in gold prices?
Yes, Q3 was extremely positive. Our revenue grew by around 13%. And in the Q3, the last 3 weeks in the December, the momentum was a bit muted, especially because of the gold price volatility. But January, everything was normalized, meaning people have adapted to the high gold price. Demand is back, strong momentum again at the stores, and it's across all the markets in India and Middle East.
Okay, Ramesh, so that point is taken, but you also hinted that there is still some pain when it comes to the lower ticket levels. What are you doing to mitigate that, and by when do you think this will improve?
In December, the last 2-3 weeks, the discretionary demand was a bit muted because of the high gold prices. Usually, that kind of demand only people can delay. Wedding demand, people cannot delay more than a week or 10 or 15 days, right? Because the wedding has to happen on the date. But now discretionary is also on track because it always takes some time to people to adapt to the new price. So January is back on track.
Of studded jewelry sales were at 27% in Q3, higher than the previous quarter. What has led to this growth?
So as you know, studded jewelry growth in Kalyan Jewellers, there are majorly two drivers for that. One is, of course, the non-South markets where we go and expand, because non-South comes with a higher studded ratio. And again, an organic growth within the existing stores as well. So these are the two growth levers for our studded ratio expansion. And if you look at our expansion plan for the calendar year 2023, we will be opening 52 showrooms. That is our plan, and predominantly everything is non-South, which will help to improve our studded ratio further more.
And Ramesh, just before we let you go, wanted to get a sense on the EBITDA margins as well. Now, despite the increase in the studded jewelry that you talked about, we didn't see a big improvement in the margins. Are we likely to see that in the coming quarters, though?
So EBITDA margins, first of all, it's not comparable with the last year because we did not have any franchised showrooms in Q3 last year. Now we are into franchise. We have a bunch of franchise stores which is working in Q3 as well. And as you know, franchise is a FOCO model which we are working, and the EBITDA margins for franchise stores will be lesser, but it will be the PBT will be on a higher side. So it's not actually comparable. And again, also to cater to the expansion plans of franchisee stores, which I just mentioned, we added approximately 900 employees across various levels. This has resulted in certain pre-operative expenses towards a salary, training, etc. So these are the major takeaway for you on EBITDA margins.
Okay, Ramesh, we'll let you go on that note. Thank you so much for joining us, but not just Kalyan